Good morning, teachers. My name is William Breen, and I'm going to be giving a financial presentation comparing Lendlease Group's economic position to their major competitor, CIMIC Group. Lendlease is an international property and infrastructure group with core expertise in shaping cities and creating strong connected communities. They are considered one of the largest Tier 1 builders in Australia. A major competitor for Lendlease is CIMIC Group. CIMIC Group is an engineering-led construction and mining group with significant experience in delivering public infrastructure. Both Lendlease and CIMIC Group were established in Australia and are currently listed on the ASX. Lendlease Group has three main sources of revenue, being their development, construction and investment sectors. In the 2018 to 2019 financial year, the group generated a total of $16.6 billion in revenue. The development sector generated 53% of the group's total revenue, being the largest of all three sectors. The development sector is involved in inner-city mixed-use developments such as apartments and commercial assets. Furthermore, the investment sector generated 33% of the group's revenue. This sector offers investment management services for insurance companies and sovereign wealth funds. Finally, the construction sector generated 14% of the group's revenue. This sector provides project management and design and construction services for commercial infrastructure. The group currently has $9.7 billion of construction activity. This includes projects such as Bankwest Stadium and the Crown Tower. Lendlease Group's major competitor, CIMIC Group, in the 2018 to 2019 financial year, generated a total of $14.7 billion in revenue, being $1.9 billion less than Lendlease. CIMIC Group's revenue stems from their multiple subsidiaries which focus on construction and mining and mineral processing and their services. Their construction sector generated $7.5 billion, or 54% of the group's revenue. This sector focuses on delivering major infrastructure projects, including railways, roads, and tunnels. Furthermore, their mining and mineral processing services generated 27% of the group's revenue. This sector provides mining services for various mine sites across Australia. Finally, their service sector produced 19% of the group's total revenue. This sector provides maintenance services for Sydney's railway and numerous other industries. Lendlease Group's total assets, being both current and non-current assets, were valued at $17.1 billion for the 2018 to 2019 financial year. The group's main current assets were cash, loans and inventories, totaling to $5.7 billion. The main area that experienced a significant decrease compared to the previous financial year was inventories. In 2019, inventories decreased by almost $600 million. Furthermore, the group's non-current assets were $11.4 billion. The main non-current assets were inventories and investment properties. Their investment properties were valued at $3.3 billion. This is because the group own, operate and development retirement communities in Australia. Their footprint extends nationally across 72 villages and offers a range of accommodation options. Comparingly, CIMIC Group's total assets for the 2018 to 2019 financial year was $10.7 billion, being $7 billion lower than that of Lendlease. CIMIC Group's current assets was valued at $5.7 billion. The group's main current assets include cash, trade and inventories. The group's inventories were $400 million, being $200 million less than that of Lendlease. In addition, the group's non-current assets were $5.1 billion, being $6.3 billion less than Lendlease. The main area that experienced a significant increase was the property, plant and equipment sector of the business. In 2019, plant, property and equipment were $2.2 billion, an increase of $211 million from the previous financial year. The increase was driven by additions to property, plant and equipment. Some of these additions included job-costed tunnelling machines for major ongoing road projects, which were driven by significant revenue growth. Lendlease Group's total liabilities for the 2018 to 2019 financial year was $10.8 billion. An increase of $3 billion when compared to the previous financial year. The group's current liabilities were $6.2 billion, being the same as the previous financial year. The main current liabilities include trade, payables and financial liabilities. Trade and payables was $5.7 billion, accounting for 90% of the group's current liabilities. Furthermore, the group's non-current liabilities were valued at $4.5 billion, an increase of $600 million compared to the previous financial year. The group's main non-current liabilities include trade, payables and borrowings. The borrowings for the 2018 to 2019 financial year was $225 million, being a decrease of $250 million compared to the previous financial year. Lendlease's competitor CIMIC have had a very similar performance during the 2018 to 2019 financial year. CIMIC Group's total liabilities was also $10 billion. CIMIC's current liabilities was $8.3 billion, being $2.1 billion higher than that of Lendlease. The main current liabilities were trade, payables, and financial liability. Trade and payables was $6 billion, being $300 million higher than that of Lendlease, and in addition, the group's non-current liabilities was $1.6 billion, being $2.9 billion less than that of Lendlease. The group's main non-current liabilities was interest, valued at $800 million, or 80% of the non-current liabilities. Lendlease Group's equity for the 2018 to 2019 financial year was $2.8 billion, being a $50 million decrease compared to the previous financial year. Comparingly, CIMIC in the 2018 to 2019 financial year, equity excluding BIC was $2.5 billion, being a $300 million less than Lendlease. This was driven by the group's operational performance, resulting in a net profit of $800 million, offset by dividend payments of $509 million. Total equity including BIC was $723 million, a significant decrease compared to the previous financial year. This decrease was due to a one-off item in relation to the provision and asset impairments of the group's financial investments in BIC and exit from the Middle Eastern region. The liquidity ratio measures a company's ability to pay off short-term liabilities when they fall due. The liquidity ratio is calculated by dividing current assets by current liabilities. Lendlease Group's liquidity ratio for the 2018 to 2019 financial year was 1.18, meaning they are currently in good financial health as they have a high margin of safety. Their competitor CIMIC Group had a liquidity ratio of 0.68. This is very low and substantially increases their chances of falling into financial distress. The leverage ratio is a common means to assess the ability of a company to meet its financial obligations. A common method to measure a company's leverage is through the debt-to-equity ratio. The debt-to-equity ratio is calculated through dividing total liabilities by shareholders' equity. Lendlease Group's debt-to-equity ratio was 1.69. Their competitor CIMIC Group had a debt-to-equity ratio of 3.9. Both Lendlease and CIMIC Group have a higher debt-to-equity ratio, which is common within the construction industry, as they are taking on debt as a means of leveraging their assets. A high debt-to-equity ratio means there is an increased risk for shareholders as there is a higher risk of insolvency. Lendlease Group's profit after tax for the 2018 to 2019 financial year was $467 million, substantially below their target profit of $600 million. This underperformance can be attributed to the administration of their engineering sector. Currently, Lendlease Group's market value is around $11 per share. CIMIC Group performed significantly better than Lendlease in the 2018 to 2019 financial year. CIMIC Group's profit after tax was $773.8 million, a slight decrease compared to the previous financial year. This slight decrease can be attributed to their decision to exit and terminate their investments in the Middle East region. Currently, CIMIC Group's market value per share is around $23, double that of Lendlease. Thank you for listening.